when these things are readily available to individuals, they can, claim these tax deductions and benefit themselves moving forward.
Morning, everyone, and welcome to today's discussion on understanding tax deductions. I am Lavisha, and today we're going to be delving more into the type of income earners that we have and the type of tax deductions that are available to each one of them, what we can see on a SARS tax return, and what is allowable claims, and what tax deductions are available to each income earner. I'm joined by my guest and tax consultant, Courtney. Hi, Courtney. How are you today?
Hi, Lavisha. Doing well. How are you doing today?
I'm well, thanks. Thank you for joining us today to talk about tax deductions and how individuals can reduce their tax liability through allowable claims. With the changes in our economy, it is becoming an increasingly fundamental tax relief option available to individuals.
Yep.
Let's begin with individuals who are self-employed or operate as an independent contractor. What kind of deductions are available to these individuals?
Great question, Lavisha. Obviously, when you're considered as self-employed or operating as an independent contractor, you're seen as carrying on a trade, okay? This normally means that any kind of expenses that you can claim are in the production of your income. We have prepared a few expenses that we normally can claim under this specific instance. The first one is an entertainment expense. This is normally something like a grocery bill or a restaurant bill, and it kind of needs to be in the production of your income, so we need to validate that business expense. Normally, we recommend you have a detailed ledger outlining the client that you're meeting, the purpose of that meeting, and then obviously proof that this is in the production of your income, okay? A second one that we normally see is home office or your rental expenses, okay? This can be something like your rates and taxes, your rental payments, mortgage interest, okay? And we still then have to kind of prove that it is a business expense, so thus in the production of your income. Normally we kind of prove this through that home office space that it is designated for you, okay? The last one that we normally see is an administrative expense. This can be something like a software subscription or an office supply, okay? And normally with these ones, similar to the last two, you kind of have to prove that you have incurred it for the production of your income. You obviously can't claim for things where it is not in the production of your income.
Thank you for the information, Courtney. Could you advise what type of documents should these individuals retain should SARS select the assessments for verification?
Okay, so normally with these kinds of tax deductions, there are a few things that we provide to individuals to kind of substantiate that expense, okay? The first one is normally a proof of payment, okay? This is supported by a bank statement or a credit card statement, things like EFT slips, okay? The second one is normally an invoice. This kind of corroborates the expense that you're incurring, and it basically matches the proof of payment amount, okay? The third one is normally a detailed schedule outlining each expense that you've incurred. When did you incur it? Why did you incur it? Lastly, we normally see with your travel claims that you will require a SARS logbook, kind of outlining that business versus personal usage as well.
Okay, and tell us, are there frequently missed deductions for sole proprietors or freelancers?
Okay, they definitely are, Lavisha. Things like depreciation on your business equipment, data or Wi-Fi usage, things like banking fees or marketing can easily be forgotten. It is important for us to kind of maintain a detailed outline of the expenses that you're claiming and obviously consult a tax professional where needed.
Thank you for the clarity, Courtney. Could you elaborate further on the type of deductions available to individuals who earn commission?
Okay, so normally someone who earns commission can have tax deductions available to them, provided that they earn more than 50% of their income as commission. All right. Normally with these kinds of things, we do see that this is often the case for a sales representative or an estate agent. Okay, and the most fundamental tax deduction that we see is a travel allowance, right? This is normally, again, supported by that SARS detailed logbook outlining that business versus personal usage as well.
Okay, and if a commission earner gets reimbursed for some costs, say petrol or cell phone, could they still claim these back as a deduction?
Thanks, Lavisha. So simply put, you cannot claim for reimbursements, right? Any kind of reimbursements are seen as a benefit to yourself, and you're not incurring that cost to produce that income. Normally, with the reimbursements, they don't cover the full cost that you've incurred. So in that resulting factor, you can still claim the remaining portion of your incurred expense as a tax deduction.
And what about salaried employees like you and I? Are there any deductions that we can look out for?
Okay, so unfortunately, with a salaried employee, you're unable to kind of claim the same things that a self-employed or a commission earner would be able to claim. Obviously, there are still some exceptions. Something like a travel allowance is still allowed, but you do need a requirement by your employer to kind of travel for work. And another option is right of use of a company car as well.
Okay, and are union fees or professional membership subscriptions considered tax deductible?
Okay, so definitely yes. We kind of need to prove that there's a correlation between the incurred expense and the production of your income, as with anything. If you cannot substantively prove that this incurred expense is in the production of your income, you're unable to claim it.
Can you give us examples of what these expenses would be?
Okay, so something where you have to pay a fee to a professional membership body to maintain your status or continue to act as a professional would then be considered, a business expense where you normally produce income from it. All right, this is something like a doctor or any kind of individual that does require that to do their job.
Okay, and let's shift to medical aid. How can we utilize this to reduce a tax liability?
Okay, so normally we kind of consider contributions to a medical aid scheme as, qualifying for that tax deduction. Normally contributions made to medical insurance are not claimable as a tax deduction. Once we've kind of got that figure, we then do a calculation and get your medical tax credit, which is then used to reduce your overall tax liability.
What about where you contribute to a dependent's medical aid? How can you claim these back?
Okay, so normally in this instance, you can still claim these where you're contributing to your dependent's medical aid scheme. This still kind of requires substantive evidence, something like a letter from the medical aid scheme confirming that this was incurred from you, and obviously proof that you did indeed incur that expense.
Okay, and the costs incurred by the taxpayer for medical expenses, can they claim these back as well?
Okay, so in respect of additional medical expenses, you are allowed to claim additional medical expenses. There are specific ones that are specific to your qualifying criteria. However, it is important to remember that any additional medical expenses that are kind of reimbursed by the medical aid scheme are not going to qualify as your additional medical expenses.
What counts as a qualifying additional medical expense?
Okay, thanks, Lavisha. So something like a GP visit, chronic medication, physiotherapy, even a mobility aid can qualify as this, okay? It is important that you just make sure that it is prescribed to you and not reimbursed by the medical aid scheme.
That's very informative and a lot of information. Thank you, Courtney. Let's shift gears a bit. How do tax deductions apply for individuals who contribute to retirement annuities, pension funds, or provident funds?
Okay, so SARS kind of created this system to encourage that long-term investments into your retirement vehicles and created this tax deduction specifically for that, okay? Normally with these, you are kind of limited in what you can claim. There's kind of 3 outlining requirements here, and it is the lower of 3, okay? So the first one is normally your actual contributions that you've incurred. The second one is 27.5% of the higher of your taxable income or the remuneration. And then the last one is normally a flat rate of 350,000. It just is very important to remember where your contributions have been limited as a tax deduction. You can then carry that remaining portion to the subsequent tax year and use that in that year for any kind of benefit. Another thing to also consider is where you perhaps have an early retirement withdrawal that can be used to reduce your possible taxable income there as well.
And what if your employer contributes on your behalf? Can you claim these at the back as a deduction?
Okay, so normally with these kinds of ones, you can. There isn't normally something that you would need to do on your side in terms of your tax return, but you will still need to kind of check and make sure that this information is correct. As previously stated, your employer will then make sure that this is on your IP5 and reflects accordingly.
Okay, let's touch on charitable giving. Can these individuals claim tax deductions for donations?
Okay, so the simple answer is yes, you can claim tax deductions for your donations. This is normally where you're donating to a public benefit organization, or as we like to call it, a PBO. And these need to be approved under your Section 18 Cap A requirements. And you do need to just make sure that it is in line with that legislation as well.
Is there a limit as to how much you can claim?
Okay, so normally with this is limited to your 10% of your taxable income. It does work similarly to your retirement contributions and things like that. So any kind of contributions that you've made and has been limited to that 10% will then need to be carried forward to the next year assessment.
Great. Thank you, Courtney. Can we delve a little more into foreign employers and people who work abroad? What deductions are specifically available to these individuals who pay taxes on foreign income?
So normally in this kind of instance where you are employed by a foreign employer and they're contributing foreign taxes on your behalf, for example, you are still allowed specific things that can reduce your tax liability. We normally call this a foreign tax rebate. This, unfortunately, is still kind of limited in its certain capacity. The limitation is normally, what your taxable income is or what you've kind of paid tax on in the foreign jurisdiction. Another thing to also consider is in terms of the supporting documentation, you will need proof that you've incurred that foreign tax. Something like a foreign payslip, a foreign tax certificate, confirming that you've paid that foreign tax to the other jurisdiction.
And is this relief option automatic?
Okay, so normally this relief option is not automatic. You will need to manually enter this information on your tax return. It is quite complicated to kind of encounter and calculate, so we do recommend, consulting with a tax professional on this one.
Okay, this is certainly a lot of information to unpack. Can you give us examples of how to practically apply this knowledge on a SARS tax return?
Okay, so normally for your self-employed and independent contractors, you would need to kind of go through certain things and apply it the certain way. Normally the scene is seen under your local trade, business and professional income. All right, this is normally going to be an option where you declare your income, you declare any kind of expenses that you have for your business and things like that. Where you perhaps are more so on the side of commission owner or a salaried employee, okay, you would kind of need to claim your other deductions. This is normally where you outline each expense itself and what it kind of equates to. So that's kind of the difference there.
And what information can we expect to already be pre-populated on a SARS?
Okay, so this is normally something where you've contributed to a retirement annuity or a medical aid scheme. This information should be pre-populated on your tax return. Some instances we do see that donations are supposed to be pre-populated, but this is not necessarily always the case as well.
Okay. Thank you, Courtney, for all of that information and your insights. It's clear that the type of income you earn has a big impact on the type of deductions you can claim.
Mm-hmm.
I'm sure today's discussion has helped many of our listeners understand tax deductions and how it can help reduce their liability.
Absolutely, Lavisha. We must just always remember that when these things are readily available to individuals, they can, claim these tax deductions and benefit themselves moving forward.
Thank you, Courtney, for walking us through this and your insights. I'm sure many of us found it very interesting. If you found this topic to your liking, please like and subscribe to our channel.